Futures trading is risky and can result in substantial financial loss.
Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. We are the short-term traders with the long-term plan, and we plan on being here a long time from now. So make sure you guys do your homework and pay attention. Hey, trades for Friday, 7/27/07. 3 green omnis behind me. Soybeans, wheat, and euro currency. Euro currency's had a couple of down days. I think she's ready to turn. Let's see what happens. Fridays are generally defined as a trend following day. The currency has been in the bull. Let's see if Friday does what it normally will do and be a trend following day and take us towards the green omni on the upside for tomorrow. The S&P and NASDAQ got pummeled yesterday. Pummeled, as with the gold and silver. I got a couple of charts, a couple of silver charts and an S&P chart I want to show to you now. I want to give you a little bit of reasoning why I don't have an S&P Omni on the board at the moment for S&P or NASDAQ for that matter. Let me show you the chart. Let me give you some reasoning why, and then we'll get back to the strategies and how we're going to look to make some good trades for tomorrow. Take a look at the charts. I'll be right back to you. The last couple of days I've been showing this silver chart to you. It's a daily bar, and it has a 200-day moving average intersecting with a major trend line in the silver. I mentioned that at this point we should become sellers and the market should drop. The day they connected, the market rallied to 13.59, and then the market started to come off a little. The very next day I showed this chart to you traders, and the market did in fact hit the intersecting trend line with the 200-day major moving average, and it started to come off a little bit. That was 2 days ago, being Wednesday. Now we're going to look at Thursday's chart. This is what happened on Thursday. The same exact chart. Major trend line intersecting with the 200-day moving average. And look what the market has given us. Wow, drop on Wednesday, major. Look at the drop on Thursday. You had a big drop Wednesday. Look at the drop on Thursday, all the way to here. We traded as high as 13.59 when we hit this intersecting spot, and we traded all the way down into the low 1280s just 2 days later. That is simple technical analysis in its purest 101 form. These are techniques that you traders have learned and are learning from me at the Omni Academy. This should be very easy for you to spot for yourself. If not, you stay with me long enough and you'll be able to do this for yourself. But I just wanted to let you know, and we called this and showed this to you days before the action actually took place. There it is. Proof is in the pudding. Technical analysis, ladies and gentlemen, does work very well if used and read properly. Okay. Reasoning why I do not have a trade for us set up at the moment in the S&P. Likely as tomorrow I'll start flash updating you with a trade. Here we have a 200-day moving average. Look at what happens when the S&P hits a 200-day moving average. Bounce, bounce, boom. The world is bearish. The analysis is bearish. Fundamentals are bearish. We hit a 200-day moving average. I am not selling into that. I don't care what happens. That is one of my rules. Anytime you see something like this, if you're the first person to sell into that, it's like standing in front of a freight train. There's no way that anybody should be able to say, this is the big breakdown that's going to happen from here. Nobody can know that. Only the market knows where it wants to go next. But based upon past experience, bounce off the 200, hit it right here, violated slightly, bounced off the 200, hit it right here, violated it slightly. The likelihood is a bounce is coming for tomorrow. However, with this major rounded top that this market's put in, I'm not so willing to say it's going to bounce off this average, which is why I'm not jumping in and buying it with all bells on like I normally would. I would have jumped in with both feet and got long here immediately. But this was no rounded top when we dropped here. This was just a bull market that had a setback. This is a rounded top. Now it's testing a 200-day moving average. If we fail that average, we will probably end up being down here somewhere in the S&P in the 1390 area. If we hold the average, off to the races we go, up to 1550. So tomorrow is a day where it's going to have to tell us what it wants to do first. I will not be giving recommendations in the video. Stay tuned, stay at my site, and you'll see the updates as they come out. Okay, so you've seen the charts. You have a little bit of my technical reasons why we're looking at things the way we are, why the silver dropped, and why we have no S&P trade on the onset for tomorrow morning. Okay, we do have some strategies, though, for Friday. The euro currency, Omni support, the low to mid 137.30s. The market's trading just above that now. If we get down into the 137.30s, I'm looking to take on a few right there. Omni's profit objective, the mid to high 138.20s. So we're looking for an 80 to 90 point move on the upside or be out MOC. That's the euro currency. Let's take a look next. In the grains department, wheat, the ZWU7 electronic wheat. Omni support, the low to mid 640s. I mentioned Friday's a trend following days usually. The wheat is in a bull. Let's take an elevator ride on the upside tomorrow if we can get one. So again, support the mid to low 640s. Omni's profit objective, the mid to low 660s or be out by the close. We're looking for a nice 20-cent rally in the wheat market. Now we have the soybeans, the ZSX7. That's November soybeans electronic. Omni support, the mid to low 830s. The market gets into the low 830s. We're going to look to get long down there. Omni's profit objective, the mid to low 860s. Looking for a nice fat rally. Now, I can say for you technicians, there's a pretty big head and shoulders building in that November soybeans chart. I don't think we're going to take the head and shoulders out, the neckline on the downside. If we take it out, there goes the end of the bull for a while. For now, we're going to buy into what should be a neckline down here and see if this thing pops a little bit. So we're looking for the 860s or, like the wheat, be out by the close. Don't forget to place all your orders MIT Market of Touch if your trading platforms allow. Now, I had mentioned a couple of things. I mentioned my premium room. Hey, there were upwards of 78 professional traders in that room with me today with 3 cameras pointed at me and a microphone and a whole bunch of really good traders on the other side. And we were back and forth, banter going back and forth, trading going back and forth. It was really, really exciting. I liked it. So come on down to the site and pop into that room. It's still wide open for you guys tomorrow. Come to the site, www.livewithoscar.com, and click on OmniChat. Bottom left of the screen, you'll see OmniChat. Click on that, go into the top room, and come visit us and sit with us for the day. I think you'll like what we see. Gentlemen, did you like that today? I had a blast in that room today, guys. I'll be there all day. I'll be there tonight and all day tomorrow as well. I don't have much to say in this video because we've had a long week. We've done a lot of videos. We got a Friday roundup or the weekend roundup coming tomorrow. So let me just say, send me some emails, ladies and gentlemen. Send me emails at Oscar@futuresanalyst.com. I will get back to those emails and report to you. Please give me calls at 718-351-2266. And if you would like to see all of our 170 now YouTube videos, kindly go to my YouTube spot, www.youtube.com/futuresanalysts. Hit the subscribe button. This way you will know when we are putting out our videos each day. We generally have videos out 7 days a week, so you have to always expect one. Mikey, Bob, anything you want me to cover here?
I think
we're good. Yep. All right, ladies and gentlemen, I hope you had a good week. We had a really exciting week. We got a lot to cover in the weekend roundup, so stay tuned. Come to the site, become an Omniac, and enjoy your trading. Don't forget, ladies and gentlemen, do your homework. It is so important. Do your own homework. Make sure you want to buy euro currency before you take the trade. Make sure you think beans are going up. Make sure you think wheat is going up. And if you do, then take my trades. Keep your emotions out of this thing. Remember, when you have a stop in place, you have a stop in place. A stop means stop loss. If you're long a trade, you can go to sleep at night if you have your stop in. Or you don't really want to keep positions at night if you're short-term trading. But if you have a stop in, you can go to lunch and you can enjoy your lunch and not ingest it like a starved dog because your stop will be in place. And if the market breaks, it'll knock you out where you're supposed to get out with your loss. And that's it. You're done and on to the next trade. So keep your emotions out of it. And the best way to do that is to say this to yourself every day. And you know what that is? Stops are in, emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.